Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment markets so you can better understand what we see in the global landscape. You know, this is day 10 of the government shutdown. It's actually not a government shutdown. It's a percent of government shutdown. Actually, only about 20% or so of the government is actually shut down. At the end of the day, we've had shutdowns of the government. We've had fiscal cliffs, we've had war, we've had terrorist attacks, and so on. If I look at just alone government shutdowns, we've had 17 since 1976. The longest lasting about 28 days. We're 10 days into this one. I firmly believe once the adults enter the room with our government officials, they'll actually increase the debt limit. What does this mean to you, the investor? Absolutely zero. At the end of the day, all these short-term little knee-jerk reactions, this news media, things that are going on not only in the economy here but around the world, have actually very little impact on returns on a portfolio. Now, if there's a bigger macro event where we're really slowing down the U.S. economy or the world economy, we're heading into recession, these things often last anywhere from 12 to 18 months in length. We're nowhere near a recession. In fact, GDP this year has grown well over 2%. And I would anticipate as we get into next year in the U.S., we could be actually north of 2.5% to 3%. I think that's going to be a positive. Generally speaking, the consumer is paying down debt. We're seeing the lowest debt levels in the last 20 years on the consumer side. We continue to see businesses, generally speaking, robust, but consumers are a little bit more guarded. That's actually a positive long term, because as the consumer becomes less guarded and they pay down debt, they'll have more money for general consumption, which actually helps the U.S. economy. We continue to see improving numbers out of Europe. We continue to see improving numbers like out of China this morning on their GDP growth for the first 9 months of this year. They were growing well over 7.5%, which is higher than was anticipated. We continue to own our positions in small mid-cap in the U.S. and in the emerging market economies, and they've actually done quite well. We currently have no signals that are looking at a sell signal or getting risk reduced anytime in the near day or two. Now, of course, something may change in the next 2 or 3 days or week or month, but we'll keep you well abreast of that and we'll keep you well informed. But at the end of the day, we do run a strict strategy, and if we need to raise cash and our signals determine that we need to raise cash and sell some equity-based investments within our client portfolios, rest assured we will do that. What we're seeing right now is basically about a 2% decline, essentially, since this whole shenanigan thing started with the debt ceiling debate. Again, nothing that is out of the ordinary, and typically 2 to 5% movements up and down, even in a conservative portfolio quarter by quarter, are pretty commonplace. So at the end of the day, of course, clients of Resney Wealth Management are being well managed and well taken care of. And I can, again, make sure that all of our clients feel comfortable in what we own and also based on our approach. We do continue to watch things very closely, and again, I do look at improvements not only in the U.S. economy, but the world economy. And I think at the end of the day, a sound investment strategy versus emotion is the way to go. You know, last night I did a live TV show, and if you weren't able to watch it because you're not in that viewing area, make sure you go to our website. It's in the media center. We've actually uploaded that for your viewing pleasure. We had a number of calls and questions from non-clients over the last couple weeks about the debt ceiling, about a lot of stuff going on in the economy, the goods and the bads. The problem I think investors face today is too much media, too much negative media. You have to remember, most of these news programs are designed to sell, advertising. So hype, negativity sells more than positive things. There are no different problems in the U.S. or in the world than there were 10, 15, 20 years ago. The difference is it's more amplified by the media, so investors think things are worse than they've ever been in history. Again, the debt ceiling debate eventually will be resolved. Whether that's today, whether that's next week, but I firmly believe it will be quicker than most people anticipate. It makes people nervous, and I can understand that. If you're a client of Resney Wealth Management, of course, and you have a question about your portfolio, please give us a call. If you're not a client of Resney Wealth Management and you want to experience professional money management, which includes risk management, give our office a call for a consultation. We always like taking on new clients who are nice people to do business with. Make sure you tune into my live radio show this Sunday from 10 a.m. to noon Eastern. And of course, visit our website for our TV show from last night. Have a safe and profitable week.